Good evening, everyone, and welcome to the summit, which is a show or a platform that is harboring insightful conversations on the most pressing issues shaping our world today. And I'm your host, Martina Abera, and today we're going to be diving into critical discussions on financial inclusion. So the recently concluded Inclusive FinTech Forum 2025 brought together global and regional leaders to be able to explore how FinTech can unlock new financial opportunities for everyone, especially the underserved. Joining me to unpack this are three distinguished guests. We will start off with Sopnedu Mohanty, who is the Group CEO at the Global Finance and Technology Network. You're welcome.
Thanks for having me.
Thank you for being here. Next is Christian Kajeneri, the Director of Payment Systems at the National Bank of Rwanda. Thank you for coming.
Thank you, Martin.
Yes, and last but not least, Anthony Mukulun-Shinye, who is the Chief Legal Officer at Rwanda Finance Limited. You're welcome.
Thank you for having me.
Yes. So, like we said, we just concluded the Inclusive FinTech Forum 2025, the second edition that took place here in Rwanda from the 24th all the way to the 26th of February, and a lot was definitely discussed. And on the first day of official opening, His Excellency President Paul Kagame was one of the keynote speakers, and he was able to talk about a lot, but mostly while technology presents enormous potential for Africa's economic growth, the continent is still experiencing a brain drain, with many of the skilled developers leaving Africa to work abroad. His Excellency President Paul Kagame noted that it is not entirely the problem, as leaders are partly to blame. Let's take a look at a short clip from his speech, and we'll be right back.
Africa is experiencing a brain drain, with many of our skilled developers leaving our continent to go work abroad. Well, this is really not entirely a problem. They cannot be blamed for that. I think we should be able, some of us, the leaders, to take the blame, partly. Financial inclusion also remains a challenge, and for those who need it the most, particularly women in the informal economy. All of this is happening in the context of global financial constraints. We need to see this as an invitation to put our resources to better use and support each other.
Yes, so that was a short clip from His Excellency's speech talking about the brain drain, but also understanding that it's not the people who are to blame, but also partly the blame going to the leaders. So I would ask you, maybe as we quickly jump into some of the questions, we can start from some of the words that he said. I could start with Sopnedu. What do you think leaders and policymakers have to do in order to maintain these skilled developers from leaving the continent, in your opinion?
Well, the brain drain challenge is nothing new for emerging market. I mean, that's if you are looking for better opportunity, you look for the better place. I think things have changed, especially from Asian context where I come from. You can see a reverse where good brains are staying in the country, they're not going out, and the brains which went out are coming back because they see a bigger economic opportunity. So the question around what should policymakers do, I think create an environment for these people to come back and find an opportunity which they would have expected where they want to go out of the country. I think that's one thing, having the right policy, ensuring they have the right incentive to stay and grow and support and contribute to the national, wherever they come from. And lastly, I think the big expectation, I would say, always has been that if you want to come back and reverse the brain drain process, the economic incentive should be in a such a way designed that it grows with the aspiration of the person, and it has to grow with that as they move up the career chain. And if you don't have that progression, then there's always a challenge of brain drain.
Yes, and now as we now dive into the discussion before I head on over to the other panelists, from a global perspective, what are the key drivers of financial inclusion, and how can emerging markets like Rwanda leverage technology to bridge some of these financial gaps?
Well, financial inclusion is actually a product of emerging market. So it's a product which comes from emerging market. It is designed for emerging market, and that's where it starts. But I always believe inclusion is not limited to the emerging market. It's actually applied to everybody. You can consider financial inclusion in many ways. Even in developed economics, banking services may not be that easily available to everybody. So, but the emerging market have an advantage. They have the design thinking of building solutions with frugal resources. And when you design solutions with frugal resources, it is subject to a better scaled approach and more distributed. So in my thinking, the emerging market natural strength is to develop better financial inclusion product. That's one thing. Second thing, for a financial inclusion to really take place in a scaled way, you need public infrastructure. And we have seen in India, as an example, Brazil, where great digital public infrastructure is the driver for financial inclusion. Because what it does, it removes the physical friction. It removes all the necessary friction you see in a physical world, brings to a digital infrastructure. And digital is a great leveler. It brings people closer to economy, removing every possible friction. So digital infrastructure is a key to that scale. Lastly, I always believe upskilling. You've got to build upskilled people every time you think about next growth. Upskilling, financial literacy are key to the success of financial inclusion.
Thank you very much. Heading over to you, Christian. As a regulator who oversees Rwanda's payment systems, what measures is the National Bank of Rwanda taking to ensure financial services reach underserved populations? And underserved populations is one of the key points that was talked about during this year's FinTech Forum. So in your opinion, what do you think the National Bank of Rwanda is taking to ensure, what measures do you think the National Bank of Rwanda is taking to ensure financial services do reach those underserved populations?
Thank you, Martin, and such a beautiful way to end a very beautiful and colorful event that we've had. And thanks for coming, and the whole team, and KFC, of course. We have a strategy, something that we call, or that we are about to roll out more, but I'll put it in an acronym that we can call TRUSTED. T stands for trust. We are working to make sure as good as the retail payment in Rwanda, especially on mobile wallet payment, is growing. We have more than 5.8 mobile wallets in Rwanda versus 2.7 million bank accounts as per the FinTech report of 2024. There are a lot of social engineering and frauds that are happening, so we are working towards building trust. The second one is reliability, which is more or less the same. The third one is affordability. We still see a lot of resistance when it comes to price. We've seen a good progress when it comes to P2P, or person-to-person transaction. One of the things that the central bank did 2-3 years ago is zero rating on accounts. So that means today, if you're pushing money from your personal account, bank account, to your mobile wallet, if they are linked, you don't pay anything. It's zero rated. Another thing that was done by the government of Rwanda during COVID, merchant acquiring on mobile wallet was zero rated. Before COVID, I think it was 1.5, and then post-COVID, working with the government and market players, it was lowered as low as 0.5 and capped today, I think, 3,000 Rwandan francs in a transaction below that, which is more or less a segment of those that are underserved. You don't pay anything. And that's how you have more than 500,000 merchants acquiring today. and 0.5 is almost an unmatched merchant acquiring rate, because the current behavior globally is around 1%, 2%, sometimes even 3.5%. And that's one of the rail of adoption for digital payments in Rwanda. And what the central bank plus other policymakers are trying to do is to make sure everyone is included and access to finance on their mobile wallet. The other one is compliance. We see a lot of gaps, however much we see a rapid growth of fintechs, what we call PSPs, payment service providers. We still have a gap of governance, understanding, cybersecurity. The payment like Subsaid or Subnendu is very young. I think mobile wallet started around 2007. The banking industry is more than 300 years, pretty much mature. So it's what we do at a central bank is a mix of development and supervision, but mostly awareness and education, especially on governance. Why is governance important? We have few fintechs today that are in the position of liquidation just because they were very poor on governance. We have a lot of exposure, almost no case in Rwanda on cybersecurity. When you do what we call stress penetration or vulnerability assessment, or VAPT, you realize there's so many weaknesses, not just in terms of security platforms, but what we call cyber threat resilience. So there's a lot that we do at the bank from the payment system perspective, from the financial sector development, from the market conduct or market infrastructure. The last one that is being introduced and going with the trend is DFI, decentralized finance, virtual asset service providers. Today the independent part is banned in Rwanda, but ongoing conversation to see can we consider stable coin when it comes to central digital currency, CBDC, central bank digital currency. We are the face of proof of concept. We finished the public awareness. We got very positive feedback. These are the kind of conversation that we want to engage for the next 4 or 5 years.
Yes, and you spoke a bit about awareness. Do you think there is progression in terms of the underserved population being aware of these financial services that are being provided to them or that are available to them, or even understanding them?
There is. I'll give you an analysis that we realized. The adoption of mobile payment is still concentrated in Kigali, right? One of the analyses that we did, when people leave the capital, the behavior is more on utility payments, so solar or any off-grid payment. The second is education, school fees. The third one is health, and people are paying Mutuelle or CBHI, and what they call IBIMI now, collective group savings. And plus the SACCOs. What's going on today is the digitizations of services of microfinances and cooperatives. Can I say that people understand it goes with first literacy, knowing to read and write? It's an ongoing activity, whole as a government, and the government is very intentional about it. But the top layer on it is digital financial literacy. So it's still a gap, and there's a lot that's being done with Ministry of ICT, Ministry of Trade, Ministry of Finance, the Central Bank, ICT Chamber. There is a campaign called Cashless, or Cashless. And we are seeing a lot of feedback. So there's a joint activity where we go in local government, remote areas, and we teach people. I'll tell you a funny behavior. We still have elderly people or people who don't know how to read and write, that use agents to keep their pins.
Oh.
Right? So the way, the homogeneous and level of trust, which goes back to the first T that I mentioned, trust, there's this accountability and the way our social cohesion is built in Rwanda to the grassroots of Isibo, Umudugudu, that people find a way to trust a mobile money agent in the most remote area. They actually sometimes trust them, and most of them are Nyumbakumis or the village leaders. So you find someone that has a list of pins of different people. When someone is sending money, they come and say, oh, Thomas, what is my pin? I got a notification, check if my son sent me money. So it's a mix of awareness, but also building trust.
Yeah. Thank you very much for that insightful information. And over to you, Anthony. We talked about a lot, especially during the forum. His Excellency also talked about how the majority of the startups right now are moving towards FinTech. So what legal frameworks are currently in place to support inclusive FinTech growth in Rwanda?
Thank you, Martina. So at Rwanda Finance, we are an agency mandated to promote Kigali International Financial Center, which is the ecosystem that brings together different actors, regulators, investors, service providers. So from the onset, we realized for one to speak of an international financial center, you should have a robust legal framework. So with the different stakeholders, we embarked on having in place laws that speak to the different legal structures, because if you talk of capital deployment, you should have these structures that speak to the investor needs. Now, for example, you can speak of the partnership law that provides for funds. These are favorite for several limited partnerships. We talk of foundations and other structures. So we embarked on, I would say, a very intentional journey and put in place all these legal frameworks that also speak to compliance, because when you're within this setting, you also have to speak to compliance, the anti-money laundering law, for example. Those were some of the legal frameworks that we put in place. And secondly, if you talk about inclusion, it's important that these frameworks speak to the different, I would say, Ps or VCs that might want to structure. Because when you look at, I would say, those that are untapped, usually the payments comes up as the first demand. Then you also look at savings, you look at credit, and name it. So we are comfortable that with the laws that we have and those that have come to set up in Rwanda. An example, you talk about the Timbuktu Fund, which is a $1 billion fund that is targeting fintechs in Africa. It chose Rwanda as its home. So this is a practical example that it looked at the available structures and was comfortable to set up with us. Thank you.
Yes, and are there any gaps that need addressing?
So right now, what I can say is laws keep on changing. They keep on evolving, that's for sure. You can never have the perfect law. But what we have now, we are more than comfortable that we can attract anybody. But we shall keep on monitoring the international trends.
Good. Good to know. Back to you, Soknedu. As from a global perspective, again, what role do fintech startups and financial institutions play in ensuring that there is actual financial inclusion that is actually truly inclusive, especially for marginalized communities?
Well, the outcome, the best way to understand the impact is happening is to look at the economic indicators, because the fastest way to understand the impact of financial inclusion is to look at payment flows. Because the infrastructure, if the policies and the systems are in place, startups have put the right solution, mobile money, you spoke about QR payments, it affects ordinary people and they drive transaction volume. You look at China, You look at India, look at Brazil, look at Kenya, look at in Africa, the volume which is coming from the mobile money is actually from people at a very marginalized or above marginalized segment. So that's one immediately you see. The second impact you will see, which I don't think, I'm not sure that in African context is applicable, a lot of government give direct benefit transfers. I don't know if it's applicable in this market. And you will see because of FinTech solutions, because of the startup solutions, because of the financial inclusion focus, government disbursement goes straight to the people without any in-between loss of transmission of money. So you see that, so the direct benefit transfer becomes much easier. Government can decide to send money instantly to people's hand through this technology inclusion product. So that's one you quickly see. The third element, which I think Rwanda has done a fabulous job, and one of the partnerships we're having with National Bank of Rwanda is to create a credit delivery system. It includes financial literacy plus using trusted credentials to extend credit. We're doing an experiment, we did Ghana. So you will see a lot of credit products are coming in the market. People who don't used to receive money will start getting credit from the banks or financial institutions. And I always say that when you give credit to people, you check for two things: ability to pay, intent to pay. Poor people may not have ability to pay, but they have intent to pay back.
Yeah.
Okay? So if they have the good intent to pay back, government, central bank, and many policymakers can create the necessary opportunity so that they can upskill that person, give credit, and help the economic transformation. And that person will pay back money because they have the intent to pay back. I'll tell you, in a traditional world, people get money based on ability to pay. If you look at the credit loss, is all intent to pay. Right?
Yeah.
So you give money based on ability, but you have credit loss because they have no intent to pay back. But poor people always have intent to pay back. They just don't have the mechanism to access credit and uplift their life. So if you can provide a FinTech and solutions or financial inclusion based programs, we will see that kind of shift, that people have access credit but just by good intent to pay back.
Yeah, you spoke a little bit about that, but what more can be done in terms of making sure that these financial institutions make it more inclusive?
Yes, so the way to make it inclusive is to stop asking for ability. Think more creatively to extend loans to people who need loan. Bring those marginalized part of the society to your financial service network. But I can understand that the banks have to be profitable, they have to run a profitable business, but there's no evidence to show that financial inclusion will reduce their profitability. It can, in fact, increase their profitability if done in the right way. So I think the banks, in combination of regulatory policies and public infrastructure, together, if you bring together, you will see an expansion of financial services to marginalized part of our society. But you need all three to work together: policy, infrastructure, and the financial institution. If they all come together, it will work.
Thank you very much for that. And back to you, Christian, you did give some very interesting stories on some of the challenges that come with integrating digital payment systems, especially in rural areas. But how can some of these challenges be overcome in terms of integrating digital payments, not only in rural areas, but also in urban areas?
A very good question, and I really like Sopnain's comment, and I'll build up on that one. The biggest challenge that we have today, or the next agenda strategy that most digital payments should adopt, is digitization of value chains. I was very happy to see that on the NST2, the pillar 1 is agriculture. Most people want to create an ecosystem of acceptance of payment, transfer of payment between input suppliers, smallholder farmers, and off-takers. But many people don't want to go through the whole pain of digitizing these value chains. What do I mean? For someone to get access to payment, as tea farmer. We have 29 structured value chain in Rwanda, for God's sake. So in terms of what the government has to do, a lot has been done.
Yeah.
29 structured value chain. When I heard about it from the Ministry of Agriculture, I was a bit shocked. Most people only focus on tea and coffee. So there's a use case that we worked on tea. And the journey was part of my previous jobs. Is the biggest challenge that we realized then is attendance, recession. So for you to make payment, you need either FSID or biometric attendance. So step one. From that registration, they do electronic scaling of their outputs. Then third, they use it to make the bulk payments. Based on your output and attendance, then you have access to your funding. Bulk payment, mobile money. And what was done then is deployment of cash out, because they still have low acceptance of payments, is creating points of cash out and transfer and remittance wherever there is an association of farmers. Now, and then from that behavior, you do what Sopnendo was talking about, is creating a credit scoring engine that is short-term. Most products that we have on the market today are traditional lending. They are not tailored to value chains and economic behavior. I'll give you an example. The rating or the way most market players do their credit scoring is based on an annual turnover. But most of these smallholder farmers or small FMCG or what we call mama mboga that work in Zinia market, Kimirongo market, they need a daily turnover.
Yeah.
As low as $50K or $40. Now the rating of it is more, you need to create an ecosystem between where they go get fertilizers, bed sheets, or anything. Or if it's FMCG, they have this value chain where they get cold and dry, so you can give a product like stock financing, right? Now, what needs to be done is look at different pillars of our economy, or what contributes to the CPI, Consumer Price Index, and see which one fall under NST2, because if the government is going this direction, that means there will be incentives, right? And then you do the painful job. It can take 2-3 years, education, awareness, and then you have an ecosystem that can grow. The other one is micro SME digitization, which is a word that most people sometimes abuse, but it's as simple as creating multiple acceptance of electronic payment at a very low rate. Again, I like what Sopnendo said. The biggest challenge that we have in credit scoring is not ability to pay, is the willpower, is the intention. And I'm adding on what he said, that someone told me when people are doing digital lending, credit scoring, and I'm borrowing, he told me people get it wrong. From the 100% risk exposure that you have on the digital lending on a mobile wallet, 50% is the perception of the product on your market. 25% is the accuracy of your credit scoring engine. 25% is your recovery model. How are you planning to do recovery? And recovery is part of education and all that. Yeah. But most people focus on building an amazing credit scoring engine, and they wonder why the product is not being adopted. So it's sometimes I always tell people, you need to follow the flow of money. And someone in the comments told me it's a whole course of behavioral economists to understand how do people behave in different segments.
Yeah.
Thank you.
Thank you very much for that very broad answer. And back to you, Anthony. You did talk about compliance. So how can Rwanda create a more enabling environment for FinTech startups while maintaining regulatory compliance and consumer protection?
Yeah, thank you for that. So before I hit your question, the issue of the challenges, for me, I still wanted to build on what my colleagues had shared. So, for example, if you look at the financial scope survey that was done for 2024, you see that the segment of those that are banked 4 years ago is 22, and it stayed as it is. Then those that are in the digital, I would say, payment systems right now, they moved from 30% to 73%. So one of the things that really we have to focus on as an industry is, for example, the banking sector. They should understand the product, they should understand the associated risk, and how it's delivered. For example, if you're to provide a loan to a farmer, how is the repayment mode? Is it ideally you'd structure it, you'd say maybe when they are harvesting, but because some of the times this money is not around all through the year. So those are things that I would say entities have to really look into. If they so wish, they can also set up subsidiaries to focus on this. Now, to the question of compliance, we are doing as Rwanda a good job, because we're also aware that while this tech is essential, we are also mindful that it can have an impact. That's when we talk about sandboxes. Like the central bank has a sandbox that is really functioning well. I like the way they go around it. They keep on reaching out to the public, and they test this product before it goes out there. Now you're trying to cater for the compliance aspect, the consumer protection. Number two, which I liked a lot during the forum, and which has been a success, I had a lot of the local banks. They're also providing funding, and they're also providing similar platforms where innovators can come and test their products, and if they're successful, they'll be the first client. So those are the methodologies that we are going around this to say, let's give you a safe place, monitor what you're doing. Once we feel you're mature, you can go out there, and the clients will also be secure. Yeah, thank you.
Thank you very much. Back to you, Sopnadu. How do you see regulatory frameworks influencing financial inclusion, and what best practices can Rwanda adopt from other markets elsewhere globally?
Well, I think the most, in my mind, the most effective regulatory framework is less about, well, let me take a step back. Most regulators around the world have almost identical, I will say, stack of regulatory expectation from financial institutions, because end of the day, regulators are responsible for the financial stability of the market. The way regulators look at regulation in like a 5 layers. The first thing they look at, know your customer. So anybody who participates in the financial system must be identified and verified so that there are no bad actors. Second, we call as money laundering and terrorism financing. You would ensure that these companies don't engage in these processes. The third layer we call as consumer protection. They're not selling product which can cause harm to consumer. Then comes the fourth layer, which we call as market integrity, which means the market must be protected from collaborating manipulation. The last one is called financial stability, which is a macro market prudential thinking to prevent any of these systems cause market collapse. Then comes the sixth layer called technology risk management, because these companies are going to use new technology which comes with new risk. That's how regulators think. Now, apply that regulatory construct to a financial institution who is focused on financial inclusion. The natural response is too expensive. I cannot deliver financial services because the cost of regulatory expectation is huge. So how do regulators have addressed this question? And one of the most, in my mind, the most effective regulatory shift has happened over the last 10 years, what you call as activity-based regulation. You do not regulate an institution based on the whole financial sector entity. You look at what activity they do, you apply proportionate regulation. So the cost of regulation goes down, but the effectiveness doesn't go out. So you're a small company focusing on a small activity, solving a problem of a marginalized economy, don't have to be regulated like a bank. So activity-based regulation has become the most effective framework to improve financial inclusion.
So in your opinion, they have to be personalized?
Customized to the activity,
Yes.
proportionate to the risk of the activity that institution is doing.
You have anything to add?
No, we are doing it.
Okay,
Yeah, go ahead.
No, this is what I think today Governor Soraya spoke about it in my panel, that House is looking at very focused activity-based regulation.
Yeah.
Sorry.
No, we are doing it. A very good question, and thanks, Sop, for the beautiful answer. 2 years ago, we managed to categorize a license. We have category 1, which is the large electronic money issuer, the like of Airtel Money, Mobile Money, we have Centrica. There's a list of almost 5 to 7 today, and it's still growing. Different volume and value of transaction, but very promising. Then we have category 2, those that we call aggregators. They do collection and disbursements. Less requirement, of course, in terms of governance, even the capital requirement. Then the third category that we call remittance service providers, inbound, outbound. Some markets actually have decided to split inbound and outbound. In Rwanda, given the size of our PSPs, it's one. And then the payment initiators, those who just do bulk payment without holding any value, they just collect and settle to this account belonging to different custodian. Ghana has 6 categories. And this goes with the economy size and terms the level of financial inclusion and awareness. So what he's saying, and I'm borrowing another panelist in the last 3 days, he say it's not using a one-size-fits-all. One size fit everyone, right? So it's still a long journey. People need to be educated. We do a lot of outreaches on the FinTech Fridays, panels like IFF, platform like this one, and simplifying. I think one of the feedback that we got, how do you make a regulation look like a commercial advert? Very easy to understand. Because we have this label that we enjoy complicating the whole process. So
And if I can add to that, I think once you've done that activity-based regulation, you have minimized the cost, but it's also a response, which I think Rwanda is doing a good job, is to ensure that the state or the central bank or the national infrastructure should take out cost of the system, which can, I'll give an example. Well, it doesn't apply nowadays, but it was applying 10 years back. The cost of asking a customer come to a bank to do branch to do a transaction is very high. So there's a need for a regulator to step up and say, you know what, no need to come to the branch to do banking. I am allowing banks to onboard customer remotely. That is a policy change. But to make that policy change, you must have infrastructure which allows banks to onboard some customer remotely by being able to verify the data. So from a regulatory perspective, there's a framework beyond central bank. There are data regulators who have to think about data regulation. There are data privacy regulation, have to think through it. I think when it comes to financial inclusion, one thing I can say that the role of this shift is not limited to central bank. It has got other agencies to come together. The ICT agencies, the Agency for Data Protection, Cyber Security, because poor people are very vulnerable to cyber issues. Very vulnerable. And with digital technology at the hand, it makes the life easier. Same time, it makes the risk of having a fraud goes up. So there's a whole multi-dimensional, multi-way to approach the same problem, and then the real impact comes in.
Yes. But the good thing is that the activity-based regulation is being put into practice.
Absolutely.
Yeah, from the Central Bank of Rwanda, and with time, it will be put into effect.
A good public infrastructure, a very thoughtful activity-based regulation, great financial literacy, or nowadays cyber literacy. Three things together will make it work.
Yes. So we have another clip coming from one of the CEOs that attended the Inclusive FinTech Forum for the past few days, and they were talking about closing the funding gap, which is still an issue. So as Africa pushes for economic transformation, closing the funding gap remains a critical challenge. And governments on this continent are spearheading efforts to attract private capital, as well as leveraging development finance to fuel key sectors like infrastructure, manufacturing that we've talked about, SMEs dragging them into fintech. Tapelo Teole, who is the Chief Executive Officer of Capital Market Authority of Rwanda, reiterated on innovation financial instruments, regulatory frameworks, as well as strategies to be able to position Rwanda as a regional investment hub in fintech. Let's take a look.
The right regulatory infrastructure, environment, the right regulatory environment. You need to have the regulatory framework that is able to necessitate people with funding or people with funds to be able to easily fund this project. And then the other thing is that, there's a need to aggregate, like I said, the private funding, so that you can have various or majority of the funders able to take a risk and not only have one funder coming up together. And then the other thing is, there's that need for de-risking the project. There's a need for patient capital, either from government or from other sectors of the economy, who will be able to provide that patient capital, which is now going to match the private capital in order to de-risk the project, and the project can actually be able to be funded. So I think those are some of the things that I think can act as complementary, because you wouldn't want some private sectors to come into the economy or to come into the sectors to assume all the risks. So you need somebody else or development institutions who are able to get some level of funding support somewhere else to de-risk the project, that is put in some money, the money that is not looking for a short-term return but is looking for long-term return, and then that can be matched by the private capital to attain the funding mechanism for the projects.
Yes, so maybe I can direct this question to you, Anthony. What are some of the roles in regards to bridging that funding up? What are some of the roles of fintech startups in terms of expanding access to financial services, making this country an investment hub as part of the NST2 goals?
Thank you. So when you talk about the funding, funding for sure is a big issue. Now, when you focus on what, again, we have done, he referred to the legal infrastructure. When you look at, for example, facilitating the different funds through collective investment schemes, where you'll attract private equity, venture capital, and all that, with the possibilities that can happen, whether open-ended or closed-ended, depending on the preferences of the investors and their clients. Now, the issue of funding should be approached at a public-private partnership arrangement. Foreign grants may come, but these are not sustainable. So government, through the different policies that we have in place, for example, in Rwanda, you have the different platforms where the private sector engage with the public and ensure that we spur these funds that can be available for the different fintechs to tap into, because one of the things that is so, I would say, common in many IFCs, so Pendu here can attest to that. If you want to have any strong funding, you have to first have a vibrant local I would say, environment to come in as partners, and that's when you can also have other foreign partners to come in and support this.
Yeah.
Thank you.
Thank you very much. And back to you, Christian. How do regulations balance innovation and risk in Rwanda's financial ecosystem, particularly with the rapid rise of fintech solutions?
A very good question. We have a department that's not the payment system that is fully in charge of financial sector development and innovation. And that's the one Anthony alluded to, who are the custodian of the sandbox. A sandbox, I think we all have that image of a box with sand where kids play. In layman or simple words, it's where you're allowed to make mistakes and grow. It's where you get an endorsement of the regulator if you're attracting investment, to say, we kind of validate what you are doing. Maybe we fully don't know what you are doing, but we believe in you. Can we grow together? So there's a lot of resources. There are many people that have graduated. The biggest challenge that we face in the short period we have been, we still need to see more innovation. There is more a replica of what is already in the market. But there are a few cases that are quite innovative. And that's where the beauty of IFF, and that's why we keep encourage people to attend the FinTech Forum. Not all of us will have the financial capacity to travel to Singapore, where you meet, how many, 500 exhibitors? You meet almost everyone. Google, Samsung, the GAFAM, Meta, all of them. Google, Apple, all of them in one place. 66,000, not all of us. What the government of Rwanda is trying, and I was explaining today on a podcast, is trying to bring, and it's growing, because today, in the last 3 days, we have more than 31 or 32 exhibitors. Big number. The turn-up has tripled. 2 years ago, compared to now, we've had good talent. So what we're trying to say, we can't ship all of you to Singapore, all of you to Money 2020, but we can bring people here. Please network, ask questions, ask them how they pitch, how they approach angel investor, how they approach VC, how they build a model that is bankable, how they fail, how they accept failure, how they scale, how they expand. And we have a sandbox. Come, we'll give you endorsement, we'll give you a license, we'll advise you. So when I see what I see, and being someone that have come from the market player, I think the government of Rwanda is doing extremely well. And like I just mentioned, we need more people with grit, or grinta in Italian, and that harness an extreme powerful willpower. And I'm giving an example of the founding Prime Minister of Singapore. It's an autobiography or interviews of people that work with him. And they asked him when he was recruiting, what was his criteria number one. He didn't look at attitude. Of course, it was a trait. He didn't look at your qualification. He would create a debate with you to see your willpower. What is your backbone? What do you believe in? And he didn't mind arguing with you. And some people were recruited, others not recruited, not on qualification. So I think we need to have more people in our ecosystem that really believe in what they can do. The government has created an environment, a safe environment for them to innovate, to dream, and scale on the continent.
Yeah, as well as being aggressive.
Extremely aggressive.
Yes.
Can I bring?
Sure, please do.
You know, he may not have that aspiration, but as an outsider, I can tell you one thing. What we saw this time at the IFF, my bet is, in 10 years' time, it will have the same size of Singapore FinTech Festival.
Thank you.
Wow.
And it will be the largest FinTech program in continent of Africa. I am not saying out of just to make Rwanda happy. I am saying based on what I saw this time. Discipline, execution excellence, and the desire to do it well, not from bottom, from the top. From top to bottom, everybody has the common desire to make it happen. Very rare to see this common trait all coming together to execute at a pride, at a national pride. And if you have pride, if you have discipline, I don't think getting to the number he spoke about, Singapore FinTech Festival, is an impossible task for Kigali. You will get there.
And it's just the second time that it has happened, the second edition, so you can only imagine.
It can only go up, years, and the growth is not linear. The growth will be at as a hockey stick.
Yes, thank you very much. Back to you, Sopnadu. Every day we see technological advancements all over the world, and with the rise of AI as well as blockchain in FinTech, how do we ensure these technologies serve as enablers and encouragers of inclusion rather than barriers?
Well, these technologies are designed to reduce the cost of technology by design. Supposed to bring more efficiency, bring more opportunity to be more creative about solutions, right? That's by design. Now, having said that, there's also a risk of creating unintended consequences of excluding people, because biases can go into system. Now, as a central bank regulator or from the regulatory community, we have started reacting to this. I'll give an example. In Singapore, we have responded to this AI impact through a regulation called FEAT, Fairness, Ethics, Accountability and Transparency. We expect banks, I'm sure Central Bank Rwanda has got similar thought process, we expect banks to be responsible when they deploy technology. And if they're deploying AI, fairness, accountability, ethics, and transparency is an expectation. Now, it is easier to expect banks to do it. So one of the things we have done to step up so that collectively we solve it is to come together as a partner. So you are a technologist, you want to solve things in different way. I'm a regulator, I have a principle to protect. Can we come together, do a public experiment so that we deploy solutions so we are responsible to what we're doing. So the big part of this journey is collaboration with a clear policy expectation of fairness, ethics, accountability and transparency. That's one part. The second part, I think, which is more interesting, the biggest leveler of any wrong outcome are consumers themselves. Consumers themselves have a way to reject bad ideas. It may not be possible to see immediately. You may see some behavior, people are getting into some technology, bad technology.
Especially if it's new.
But over a period of time, they know how to reject. So you have to sometimes give respect to consumers' own behavior. And of course, as a regulator, I talked about the regulatory stack. Central Bank Rwanda absolutely will have a mandate to ensure consumer protection. This is deep in our DNA. As a regulator, we expect consumer protection is our responsibility. So consumer protection, collaboration, and a natural force will hopefully not take us to that risk you are articulating.
Yes, thank you very much. We're very close and nearing the end of this conversation, but as we wind up, this question goes to all of you. We can start off with Anthony. What are the key lessons that you derived from the Inclusive FinTech Forum 2025, and how can they be implemented to drive real impact in financial solutions and inclusion?
So, the key lessons I would say is, one, we have to work together. Collaboration is key. It's important that we listen to each other, understand each other's, I would say, needs. And once you get that, then the solutions, once made, they'll be acceptable. Thank you.
Yes.
Yeah.
Well, I tend to see this in 3 C's. We need to convene more people together. We need to think about capabilities, and we need to think about capital. I think forums like this will continue to drive that thing, bring the 3 C's together, and that will have the network effect we're looking for.
Yeah. And you?
Yeah, it's a good question. And mine will be more key highlights, if you can put it in that way.
Yeah.
During the IFF, we made 2 major announcements. The first one is called the Africa Next Generation DPI, SOP has mentioned it, SOPNENDA has mentioned it twice, digital public infrastructure. It's high time that governments build public rails or public infrastructure. The same way you build a tarmac road, the same way you build utility infrastructure, we need to build payment rails. The government of Rwanda has had a strategy for more than a decade now, more enforced in 2018, where we had to run the Rwanda National Digital Payment Strategy, or eCash or RSwitch. We are very happy to launch what we call RNDPS 2.0, and we had the person-to-person transaction during the IFF together with the Ministry of ICT, Access to Finance Rwanda, KIFC, different stakeholders, Central Bank. We launched the merchant acquiring interoperability, and many more use cases will come. The other one is cross-border interoperability that we're going with Ghana. And a subset of it is license passporting. What it means is if you are a local FinTech, you have the ability to go and operate under the same regime, maybe with minimized scrutiny, operate in a huge market like Ghana and vice versa. So if you're in Ghana, you can also operate in Ghana. So these are part of digital protocols that AFCFTA, Africa Common Market that we've been talking about. And it was very emotional to witness this with the support of Singapore, GFTN, Ghana, and other central banks, PAPS, the Pan-African, and we are inviting more central banks to participate to this beautiful initiative.
Can I tell you, as a closing remark?
Yes.
The one which stuck to me is His Excellency President Kagame's brain drain point. I've never seen a head of state in a FinTech conference talking about brain drain. I'm very thankful to him to bring that topic, because to me, that's a core to the nation's growth. Get the brains back to the country.
Yes, and bring them back and for them to contribute to the economy's growth in their own country.
Absolutely. I think it's great for him to bring that topic.
Yes. Thank you very much once again. As we wrap up today's session, one thing is clear: financial inclusion is not just a goal, it's a necessity for economic growth as well as social equity. And a big thank you to my guests, Sopnedu Mohanty, Christian Kajaneri, and Anthony Mukulu Nshimye, for your very insightful and valuable sayings in here. And of course, thank you to our viewers for tuning in. Once again, thank you very much for being here.
Thank you for having us.
Yes, and this has been the summit once more. My name is Martina Abera. See you next time with more thought-provoking discussions. Stay informed and stay tuned. Thank you very much.